Good morning, everybody, and Happy New Year. It is Tuesday, January 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the chat section, and we'll get to those during the show. We don't have any overnight markets here in the grain complexes. We're going to open here at 8:30 Central. Outside markets, the Dow's down about 215. Bonds are off a point, and crude oil is up about $1.70 here to start this morning on some overnight news with Iranian ship entering the Red Sea as a sign of defiance against the United States here this morning. I'm going to shoot it over to the guys. You know, we're talking, I think the main headline this morning is going to be good rains in Brazil, you know, over the long weekend. And, you know, they were forecasted, so we're not sure, you know, how much of that was maybe factored in on Friday. But, you know, looking at the long-term outlook, it's hard to say that there's, you know, trouble on the rain front as we look at South America. So I'll throw it over to you guys this morning. Ben, what's your thoughts on the beans complex?
You know, after a long weekend, end of the year, the rains were forecast. I think the forecast moving forward looks very agreeable to soybean production. You know, you kind of got to go into this with a dose of humility just to see how it reacts, how much of that may have been factored in. You know, beans are back up against kind of a trend line that they've been setting up after their breakout and their pullbacks. So I think a dose of humility here. I think you'll have a better idea of beans, you know, what their thoughts on the rains were by 10 o'clock. I know that sounds vague and opaque, but our job is not to pull out a crystal ball and say where the market's going to go. But I think that this is an inflection point for soybeans. That the managed money has done a really masterful job of exiting a large soybean position. So I think the question now is, do they feel compelled to get short? So, you know, new year, see what happens coming in. Corn, kind of a similar story. It settled right above its lows that were struck earlier in the week. On Friday, end of the year, you know, was that managed money marking their positions fundamentally? Is that where we should be? I think volatility is going to pick up here as traders come back from really an extended break. You know, most traders start to disengage after the first or second week of December. They step aside. So, you know, coupled with a lot of geopolitical risks, including Black Sea, really getting flared up again. I think that we got to keep an eye on that, and particularly wheat. You know, we did some great export sales about a month ago in wheat. And last week I had mentioned that I didn't think that the Ukraine stuff would have a material impact because it had not for a while. But we saw that it did have a strong reaction, and we still haven't taken out the recent lows in wheat. So, you know, there's some things here that can get these markets going. But I think most importantly, step into it with an open mind to see how things transpire coming into the new year.
That's really good. Yeah, Dustin, we saw, you know, managed money, you know, almost neutral in beans. They're still long, you know, roughly about 5,500. They still got about 170 plus thousand short in corn. You know, thoughts on that as we enter, you know, obviously some pretty pivotal time in South America, but, you know, as we're, you know, checking off dates on the calendar here as we approach spring in the United States as well.
Yeah. So funds, you know, very neutral beans after, you know, this is after 5-6 weeks of fairly heavy liquidation, as Ben mentioned. So we think we saw that in the price action. But keep in mind, you know, going into the 26th was the day that we would have recorded this for COT. We had a pretty good sized rally there in corn and beans into that day. So it's kind of a dull, neutral timing for when they would record what funds did through that time frame. So towards the end of the week, like Ben said too, you know, there might have been some more fund selling that just didn't get recorded yet until next week's report. End of the year last week, we're starting a new year this week. We've talked about index fund rebalancing, and if you just look at, you know, on balance of, you know, how some of these commodities have performed against each other, corn's been pretty weak, especially to a bunch of other commodities. So the premise would be that on the rebalance, we might see them purchase some corn coming into, you know, that Jan 5th through the 9th time frame. that'd be something to watch for going into that Jan report for maybe some opportunities. But as far as funds are concerned, I don't know unless they plan on taking a large net short bean position. I think a lot of that's cleaned up. So we'll have to just see, get some cues if they're going to continue to take a large stake in it going into the new year.
If you look at this, we were talking briefly this morning, but like this, wet pattern that we're seeing out forward for Brazil, and obviously they received a really beneficial rains the last, you could call it 8 to 10 days. Are they kind of what they're going to be, Dustin? I mean, in your opinion, is it, have we taken some of those really drastic scenarios off the table here, or what do we think on that?
Well, it's just kind of like our, in our weather in August. If we had, dry weather in June and July, and then get really favorable rains, going into August and through August, how is our bean yield going to respond? A lot of times those are some crop saving rains at the right time of year. And I think that the market was capable of trading in the $13 to $14 range prior to knowing any weather problems existed in Brazil, right? Globally, we will be abundant if they stay anywhere within trend, of course. But we're coming out of a tight year in the U.S., and we're probably going to finish our carry out fairly tight either way. It is going to make a difference if we can ease off on the exports a little bit, if Brazil can take over those. If we go from like a 6% stocks to use carry out in the U.S. to an 8% stocks to use, because we can let off the gas a little bit on exports because they're competing more heavily. Yeah, that can bring our price down even further. But I think it is very difficult to judge a crop in the U.S. in early August, let alone in a completely different continent, right? So it's hard for me to say that we have any sort of insight knowledge. I will be interested to see what CONAB says. I know a lot of people have been poo-pooing CONAB numbers as being too strong.
That comes out the 10th.
Yeah, Jan 10th. I think that will be a big one. USDA will have an opinion of it as well, January 12th. So between those two numbers, I would probably defer to that to make it a larger call.
So to Ben's earlier point on volatility and stuff, when you see maybe an uptick as we head into the next couple of weeks going into these two reports, people are certainly going to have all eyes on CONAB to start, see what their opinion is, and then USDA will either where they've been or.
Well, I definitely believe in efficient markets, and I think Ben made this point too. Is like how much of the rains have been priced in. The dollar index is up right now sharply. Crude oil is up sharply. And equities are sharply lower following some of these attacks. So I think geopolitical risk is certainly heightened right now. I don't know exactly what that means exactly, because you've got some conflicting reports there. Dollar being up sharply is typically a negative thing, but having crude oil shoot back up into the mid to high 70s eventually could be a strong thing as well. So volatility is kind of what I would expect when I see those types of things happening. Is you don't really know how it's going to impact it yet.
Yeah, and the rebalancing too, so.
Yeah, that's a good point, Johnny. That still continues. That's going to go through what this week and probably next week as well, guys? What's that rebalancing?
5th through the 9th, is it right, Ben?
Yeah, the 5th through the 9th business day.
Yeah.
Historical kind of bear grain markets, and I'm going to use the term bear loosely only because we're below all major moving averages at this point in both corn and beans. We see an uptick in volatility into the January report, and then once we get that data and we kind of go through it, markets tend to be really kind of non-volatile up through the 2nd or 3rd week of February. So it'll be interesting to see how we digest that report. I would. My opinion, I think that we're going to see an uptick in corn yield. I don't think that we can digest a downtick in bean yield, and I think that all eyes will be on what exports look like. So I would expect, and with the rebalance beginning of the year, some position squaring, good rains, geopolitical risk, I think that we're going to see volatility uptick. And as traders come back, a lot of times they're zeroed out to start the year. So for them to take on risk in either direction sometimes requires a little bit more price incentive than we see it, late in the year when people are quote unquote playing with house money. And I think that's something that from a trading perspective is to keep in mind. That's why we've been working with our customers to have some strategies in that we like should we see an uptick in volatility.
That's really good. It'd be interesting to see too what basis does here the next week to 10 days after the first of the year now with grain movement. By all estimations, farmers weren't selling a lot going into the new year, but you could probably see maybe a little bit of an uptick there. Dustin, any thoughts on that?
Yeah, I think that's one of the concerns we have is that, I think you think about early 2023, there was a lot of time frame to be selling higher prices. So I think a lot of cash was raised in calendar year 2023. So maybe that put a little bit less burden for, harvest raising cash. But when we get, we still think about high cost production and another year of high cost production, 2024, we need to raise cash. We need in these interest rate environments, most growers in the 7.5% to 9% operating note ranges here. Everyone knows what that number means to them when they're sitting with bushels in the bin rather than paying down that operating note. It's quite a large expense when you start pushing it out to March, and let alone pushing it all the way out to June, July. And we've got to see things moving here for a lot of growers. So if we have had lower futures prices post knowing what the crop size was, right? For corn, it's been largely sub $5 for most of that time period. When do you guys start throwing in the towel and just start moving corn? I think that starts happening now for the majority of growers. Right? Obviously, if we have a lot of growers that have pre-hedged going into that year, they might feel differently about it than growers that are sitting on a ton of excess supply right now. So I think that the clock is ticking, and that you will see guys start to move more, regardless, just for cash flow reasons this time of year.
I think we kind of have an interesting setup here as well across a lot of the central U.S. with a pretty sizable storm forecasted the following week, coming out of 2 weeks in a row of what were probably very limited deliveries to the processors. This is not what they want to see, which would deter people from hauling corn if there were a bigger storm, as they've run through on-site storage. It goes pretty quick when you run an ethanol plant that's 1 million bushels a week and you have 3 million bushels of storage, and now you're coming into your third week of 4 days of delivery followed by a storm. So it might be a good time to go out and shop a little bit of basis if you're in that position. So, and it looks to be a pretty wide coverage on that storm.
Yeah, that's a good point, Ben. I know kind of from northern Illinois back to the better part of the middle part of Illinois, they're calling for snow, pretty sizable system that's starting to take shape. Maybe fix up that drought monitor a little bit too. I know we've been looking at that across Iowa and a couple other parts of the Midwest. So would be welcome respite for those folks. Coming into the open here in just a couple minutes, guys. Parting shots, first show of the new year. Looks like they got corn lining up pretty. Let's see here. Looking at March.
70 looks like just
70.5.
Yeah, a tad lower.
Yeah, 70.5. Yep.
Yeah, but they got March beans at 93 thereabouts. So that'd be maybe 5 lower or so.
Yep.
Coming out of the weekend. March Chicago wheat, 28 3/4. So just marginally higher is where they're lining up to open. And on that side, outside markets still down 230 in the Dow. Dustin, what do you got for crude oil over there?
Yeah, crude oil right now is coming into this time frame. We're up just over $1 still. We were up more than that earlier in the session. So the high was 73.64. We're back into the 72s now.
Okay, I just opened grains. March corn down 3 1/4 at 468. March soybeans down 11 to 12, about 12 cents now at 12.86 1/2. And March Chicago wheat's down 3 1/4. We'll be streaming live on X, Facebook Live, and YouTube Live every day that the markets are open at 8:15 Central Standard Time. We appreciate everybody tuning in. Hope you had a wonderful new year. We look forward to this next year. And thanks again for tuning in. We'll talk to you again tomorrow.
Thanks, Dan.